There's a lot to go through. You can see it in the list here. Take a look. You guys read it on your own, and I'm just gonna start going fast. Finished up September. It's the best September in 15 years for S&P. So again, everyone who wanted to sell the Fed news and basically sell coming out of the summertime, you don't hear any more of the 10 listed fears of tariffs and inflation and stagflation and Fed making policy mistakes and earnings and recessions and everything else. So we're moving on, and I think now people are focused on the facts of what's are happening. S&P was up 1% last week. Russell was up 1.8, led again. We've got vol moving down. We've got junk spreads at all-time tights. Bond vol keeps coming in. It's affecting mortgage spreads. So you got the housing boost coming from the spreads coming in. I expect, as I've said, for that to continue at the White House. And not just bond vol, but you've also got FX vol coming down. So everything is getting stabilized, and we still have now a 95% chance of a cut in October, and close to 100% for December at this point. Hartnett, who's been calling this a bubble for a while, this is one way to get around saying it's a bubble as a negative headline. Market bubbles only burst when central banks tighten, and there's no sign of that. So this was in the Blockworks Forward Guidance weekly podcast last week. I've shown you how rate cuts have been a positive when you're not in a recession. This is another way of looking at it. Something that's only happened once in 40 years, which is the only time the Fed cut without falling earnings. In this case, it's double-digit earnings. I give these guys a shout out because this is pretty much the only macro podcast I listen to at this point each week. I listen to AI podcasts, I listen to power podcasts, a whole bunch of different things. But I've pretty much given up on the macro podcast because I don't need to hear what people are saying, and that usually is a sign that people have given up on the bearish side. So when the sentiment gets up to higher levels, which I think is definitely going to happen over the next 4 months, it'll be worthwhile. But these guys are the ones that I would recommend you guys listen to on a weekly basis. Sentiment, don't care what anyone says. This is what I hear from people as well. And I thought this line was perfect. We're getting plenty of pushback from traders as we continue to highlight investors. All I get is pushback from people who are still worried about an AI bubble. So for the people who've made money, they're obviously on top of it, but it's still an incredibly high percentage that are negative. Retail, on the other hand, continues to push things. So this is the retail favorite index blowing out again last week. Jared Kubin, another good person to follow in this, does a lot of really smart stuff out there, particularly on the factor side. Equities, retail continues to be buying ETF buyers in 183 of the 185 days. And so what you're left with is this, and I brought Micron up. I've spent a lot of time talking about Micron this year. It's been a nice position for me. And institutional people have a hard time buying stuff like this. Retail doesn't, quant doesn't, but institutions and also analysts that maybe had a sell rating on it here, there's just no way for them to turn at this point, and these charts are everywhere. I had a meeting this week, and it was a great meeting. Guys are very smart, but they said that they had experts coming in on high bandwidth memory and that there would be an oversupply situation next year. And I could not believe it. It's different than the work that I do, and I'm not a bottoms-up person. This is just purely from a top-down basis of focusing on AI, where all the demand is today and where it'll be a year from now. And I found it unbelievable, but then I started thinking about how this would be a good way to use AI and show you guys how when these analysts come in the door, you can use it for this. I was told this week by experts are suggesting high bandwidth memory supply will be larger than demand next year. So this is a common belief. I found credible discussion that some analysts expected, blah, blah, blah. So then you go to the next one. So the question for me regarding the experts, there are so many areas of growth and demand. Doesn't an expert need to understand the breadth of the demand side more than supply? Historically, was HBM driven mainly by a sector or two where demand was fairly linear? This is an incredibly important part of this. We are in exponential demand. There has not been a time that you can go find where you can find exponential demand. That's why the numbers look so big. That's why it feels like a bubble. Why experts risk under demand? Linearity bias. This is so important because most demand is related to nominal GDP, the overall spending. So if you're way above it, like think about the revenues of the Mag 7. They're way above nominal GDP, but only by 1.6 times. They're growing revenue at 10. The S&P 493 is growing revenue closer to 4. Nominal GDP is 5. So you get a point here where you got to focus on where it is. But then there's another thing. It creates this beautiful heat map for me on all of the areas of demand for high bandwidth memory. A lot of these, like this has never happened before. This has never happened before. We've never needed a defense reboot the way we're going to need this time. So how can any semi-analyst say with certainty, unless they're focusing across verticals, what's going on? That is the reason why I do this podcast. That is the reason why you have to understand that these markets are moving in this exponential chart function, because Micron was trading at single-digit PEs for most of the year and is still off future numbers. I still think they're off because of the certainty of what is to come. So data centers is one side, but when you spread it out, it's more. SK Hynix, same boat, up. I just put this in here because this was a news item this week. And again, I'm going to keep saying it. I think a deal with China and the US, if it does occur as I expect, at the Apex Summit, where they announce some kind of bargain, do not underestimate that that could be the trigger point for the true bubble, or the true point where everyone is forced into the market, because I do view it as a much bigger event than most people, and I think people are sleeping on the wheel at the importance overall. ADP came out. Can't minimize this. Last 5 months, 6 months, whatever you want to take, this matches up with what's happening across there. We also, as we go through this, so if I go, this is not the GDP, but I've shown charts like this, but this had other new data. So we have new highs for the job differential in terms of the conference board, worsened again. We had the JOLTS quits rate came back down here. This is the unemployment rate up here. This is temp hiring here. And then this one here, we had earnings from Paychex. We had ADP out. This is the human resource GICS level 3 sector relative to the S&P, breaking also to new lows. There is no hiring going on. Here's the challenger. People look at the stupid number that comes out in Bloomberg. They give you a lot of data. Announced hiring plans for September. This is the retail time period. 117. That's a drop-off of 75% from last year, bigger from the year before. Look at these numbers, 2017 on. We have no hiring plans going on from people. We also had inside the JOLTS number, we get job openings, and then you do a ratio relative to people people looking for work but unemployed. We broke through 1, so there's more people looking for work for the first time. That's the white line here. It broke above 1. That's the unemployment rate tracking it. So the labor market continues to be on the weaker side. And Walmart came out this week, says he can't think of a single job that won't be changed by AI. Walmart is not projecting large-scale layoffs or hiring sprees, but rather a period of considerable transition. AI is going to change literally every job. Maybe there's a job in the world that AI won't change, but I haven't thought of it. Walmart has already deployed AI agents. This is going to become a bigger story, guys. I've talked about it. I'm going to show you a lot of stuff that was released this week. Same thing. Accenture is cutting staff. Is cutting, plans to hire. What's the difference between those two? One's a fact, one's one to keep people from going crazy. Advanced AI is becoming a part of everything we do. This is Accenture. The reason these, and then you have Amazon basically saying the same thing back in June. The reason I brought up all three of them, in case you didn't know, here are the top 4 largest private employers in the United States of America: Walmart, Amazon, Accenture. All of them saying the same thing. Google announced job cuts. They didn't announce them. They kind of slipped it through on September Monday of this past week, and they were in the cloud division. Google Cloud is currently Alphabet's fastest growing major revenue segment. They've mentioned on their earnings calls that they have significant capacity constraints inside that division. The employees were not happy. And professors, everybody is struggling to get jobs. This is a leading professor out of UC Berkeley. People hate colleges now. They don't believe the college education is worth what it was. We're now down to 35% see it as very important. I could not agree more, especially as we go into AI. Every minute that you were in a classroom, you're wasting time not using artificial intelligence. You are learning how to memorize things which have zero value and have now been completely commoditized. The social side is still worth money, but the time wasted in the classrooms because the education system has not embraced artificial intelligence, even though all the kids are cheating at this point and the schools don't know what to do. All right, the middle-aged are no longer the most miserable. Youth is miserable. And I think everyone knows that. And in New York City, young voters showed up for Zohran Mamdani. We have a big election coming up, and I think people should start paying attention to what's happening in the country at the youth side because of the inability to get jobs and how it is feeling. This is a social situation that is going to be an important macro thing because Donald Trump proposes new stimulus checks of up to $2,000 for Americans. This is the whole point of Bitcoin. This is the whole point of the disruption, not just of AI, which is not something new. Machine learning's been around for a long time. The disruption started with the Mag 7. Every single dollar of Mag 7 growth means less jobs for people. That is the reality of innovation in Joseph Schumpeter and creative destruction. Trump may declare a national housing emergency. What to know? Again, we're going to have to print money and give people money to offset the concentration of wealth that's happening in the concentration of jobs. Measuring the performance of our models on real-world tests. You really should read this. This is a new GDP val, new evaluation that OpenAI, what measures the value that they're seeing across jobs. They go through a variety of jobs and they're measuring what AI can already do. I showed you the thing with Mercer last week, a benchmark on AI frontier models, and basically doing work and measuring what their ability to do already is. Two critical findings towards a shift. Latest models matched or exceeded the performance of skilled human experts in approximately 50% of the cases. Again, this is today. These findings strongly suggest we're on the cusp of major changes in knowledge-based industries. The primary impact is not necessarily job elimination, but rather task displacement and job design. So, if you are leadership at any company and do not have an AI plan, can you survive from the competition using AI? No. Basically, if you're not moving ahead with AI, every day that you lag behind, you are falling behind at a pace that is unprecedented. This cannot be ignored. This cannot be something that you don't have a plan in. You need people like me to come in and help out, to be able who spend their entire life using it, but also training people on it. It's an important part of this. This is why I started to do this as a job, because I could not believe how important it was for this. For individual workers, they have to do the same thing. You have to get control of your future career. There will be tons of job opportunities coming out of this. It's going to be the augmentation, but you have to be able to use it. And a lot of places prevent you from using it, so you must use it on your own. We're back in the bubble thing again. The AI boom is unsustainable unless tech spending goes parabolic. Tech spending is parabolic. I don't even know what people are talking about. In terms of a bubble, from an investment standpoint, I thought this was a good thing to highlight. The number of IPOs by year. This is how many IPOs we've had during ChatGPT. Nothing. Here's what we had during the dot-com bubble. This was what I referenced in a paper this week. IPOs are a great way to go through it. By the way, most of those IPOs are in crypto this year, particularly the ones that have done well. Moonshots, another great episode. They go through the AI bubble from an expert perspective. And again, if anyone knows AI bubbles, those guys do, because they're all of the age that they were part of running businesses, end of the dot-com bubble. That's where they made their money. And they went through and they had a great discussion on it. They obviously said there was no dot-com bubble. They talked about the supply and demand, which I think is really important in terms of going through for you guys on the semiconductor side, which I've spent all this time. But they go through how it's not a bubble, and they go through all of the different reasons. Listen to it on your own. I'm not going to take you through it, but these quotes, I think, in terms of the discussion, you can go through the scarcity side, the fact that demand is way, way, way ahead of supply, and there's actually no way to get the supply, and they talk about that. There is no way to get the supply necessary for the amount of products that would be rolling out today. The power is now the only thing stopping the products from coming out. The compute is not an issue at this point in terms of it being available. That may change, but right now there's plenty of compute. The issue is the power side. But one thing is important, which I think everyone needs to understand, and this is that the latency between Capex and returns in the internet era was years. With AI, the payback is immediate. And that's what you're starting to see is that you're already having revenue growth. So the latency between the investments and the revenue growth is there. It may not be big enough, but you're already seeing it, where in the case of when the build out happened, you had to wait for it. This is going much, much faster, and it's the speed of expansion, the scope of the disruption. All of these different components get to be really important when you're going through this. And so you have to think about how quickly this stuff is moving. That being said, I just want to make sure that it's clear. There are going to be horrible investments, and they're not just going to be by the VC world in terms of investing. That goes on. How many actual companies do the VCs invest in that turn out to be great? So Jeff Bezos called it an industrial bubble. Investors don't usually give a team of 6 people a couple $1 billion. The size is massive. They have no product. It is different, but that's because of the speed that's gone on. David Solomon said a lot of capital being invested in AI will turn out not deliver returns. Completely agree with these guys. There's no doubt that there is money flowing into things, but that's because the opportunity is so big, and that's what ends up going on. Jared also highlighted this. This was a great kind of pushback from someone who's well respected inside the AI world as a researcher. As a researcher at Frontier Lab, I'm often surprised by how unaware of current AI progress public discussions are. I could not agree more. I've been in meetings and I've been on podcasts where people have just called it a talking parrot. I'm in shock at some of the things that I hear when I'm in these meetings by people saying it still hallucinates, all this stuff. If you don't use it, you will not have a job. There's no other way around it. It is disrupting everything. It's a tsunami of progress, and it's a tool that can do what human beings do. So whatever you do, thinking-wise, it can do already. IQ's up to 150, and by the time the next 6 months come through, it'll be way above that, and then 6 months after it'll be above. So what he does in this, failing to understand the exponential again. The current discourse around AI progress and a supposed bubble reminds me a lot of the early weeks of the COVID pandemic. So he's using the mathematics side of how quickly things got out of control. Public commentators kept treating it as a remote possibility or a localized phenomenon. He goes through the actual data in here to show the progression that's happening by the time period, that it is still on the same line of what it can do. And that's why I said every 6 months, you're going to have new models coming out there. The same thing goes for the evaluations in terms of what they're doing, parity with an industry expert. And basically it said, it may sound over-simplistic, but making predictions by extrapolating straight lines on graphs is likely to give you a better model of the future than most experts, even better than most domain experts. So it's actually still going in a mathematical way that you can forecast going out, and that's one of the reasons why the demand just continues to go. So Anthropic released 4.5, its latest bid for AI agents and coding supremacy. I used it. I'm going to show a demo of something I did related to Teradyne. Sora 2 was released, the video side. So this is kind of the VO3 for OpenAI. OpenAI also released Pulse, which I've used all week. A smarter AI for everyday productivity. What if your assistant didn't just wait for your question, but anticipated your needs, delivering personalized insights before you even asked? So basically, it's a virtual assistant that knows who you are, what you're doing. Pulse is a daily briefing feature, does research overnight while you're asleep on anything that you have in your chats. So when I get up in the morning, it's got all the things that you guys are seeing here. It's got the latest updates. It's got stories. If you want, you can connect it to your Gmail, to your calendar to get what's going on in the morning. The AI agent world is here. Signals the agentification of AI is real, not speculative. Demonstrates that OpenAI is actively working towards systems that act autonomously and not just respond. This is critically important for margins, and it's critically important for jobs. They also announced we're taking the first steps towards agentic commerce in ChatGPT, connecting to Shopify and Etsy. Remember, Shopify offered or put stablecoins on there. You can see what's happening. The crypto world merging with the AI world. We've got ChatGPT now converging with Shopify to do shopping with inside your chatbot, and you can pay with stablecoins. For this proactive argument, proactive meaning it's now reaching out to you of what you want, what you need, everything along those lines, but in a place that you are, and it's actually reaching out as opposed to you have to go to Amazon and then you look, do you need to buy this now, whatever. It actually knows what's going on, and it's not just an ad that pops up in front of you. For the proactive argument use of the week, release of OpenAI and Shopify Etsy, the Pulse release, details behind the Sonnet 3. So I go through what all of them mean. And basically, when you get through this, you end up in a situation where how Pulse aligns and accelerates with everything. So I wanted to just show the synergies with ChatGPT's commerce, to check out ambitions, what the role of Pulse is. It's a stepping stone. It helps OpenAI start getting users into the eye that ChatGPT can do things for you without waiting. It is no longer just a chatbot. So this used to take a long time to do. Think about when Amazon went from a bookstore into everything that it is today. That took a long time. The reason they can do this fast is because they already have close to 1 billion, if not 1 billion users. And so which companies will take revenue share? Which companies will this approach from OpenAI take revenue share from? From Google and ads and shopping. Amazon. Meta. Think about what I've said repeatedly, that AI will cannibalize everything. So OpenAI, which is not a public company yet and is not part of the S&P 500, is already at a size and a scale big enough to compete with the Mag 7. There will be many, many, many competitors for them. It won't just be OpenAI, because once OpenAI can do it, a kid in Brazil can build a business that can have the open source version doing the exact same thing. Once they have AI agents, they can build their own app in Indonesia, in Pakistan, in all these places where the Mag 7 have had global dominance. This will be a revenue take away from those companies, and that is the reason why I'll keep saying Bitcoin is the only digital company. It's not a company, but it's the only thing with a moat now with AI rising. Claude, Sonnet 4.5. Let's just go through this. How this moves things into the proactive narrative. Claude 4.5 does the exact same thing. Again, it's allowing for more agentic world. You have to spend the time on realizing how fast this is moving. Hitachi shares were up 10%. OpenAI to collaborate on energy, artificial intelligence, and other areas. OpenAI is releasing things, spending money, making deals. I don't see how this doesn't end badly, personally. So again, I'm very very realistic on this. I think the revenue side is going to be very difficult relative to the spend. When you're spending that much money and you're trying to drive in revenues, maybe you can thread the needle. But to me, it's more likely that those companies, which will grow rapidly over the course of the next 3 years, I just don't see how they don't run into issues. CoreWeave Inc.'s a $14 billion meta deal for the AI demand again. Okay, so now this gets into Teradyne. This is really meant for the retail traders, but it's also meant for hedge fund people running the business. It's also meant for anyone who does investments at a bottoms-up basis. This is in Claude, just 4.5. This came out this week. This is my prompt. Okay, I'm not going to read every single thing. I'm trying to do this with Teradyne. Explain how Teradyne makes money, break it down. You can see this, analyze the whole thing. Now, summarize the last 4. So I'm not going to show you the output from the one I just went through. I'll go through something that is more interesting to me. By the way, this is multiple pages of work. So this is work that would have taken to do, I don't know how many hours, days, whatever. Summarize the last 4 earnings calls. For each call, do the key messages, the analyst questions, blah, 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 blah. Let's just go through some of it. 3 biggest positive developments between 24, second quarter of 25. It goes through the highlights. All of this takes seconds. And again, I'm not showing you even 1/50th of the output that came out. I kept asking it new prompts, saying, okay, now summarize it into the critical questions. But a lot of this stuff it just did on its own. Talks about the surge that happened in why it happened. Called this the inflection point in the Q2 earnings. Remember, I talked about it probably last week. I think it was the first time. I think I talked about it on Pomp the week before. I can't remember exactly. But you can go through. We're now competing for merchant GPUs. We now have an opportunity to compete for merchant GPU testing, a market we've been excluded from for 20 years. It is 2 times larger than the VI compute, which is where the bulk of their business is. So new opportunities. That becomes one of the questions. They go through it. These are all things from the earnings report in terms of the most recent earnings call. Now it shows you the shifts in tone in terms of each component. Optimistic, confident, bullish, cautious because of the tariffs, then very bullish. You can go through all this. Does this all its own. All I did was give it the prompts that you guys saw, and then I asked some questions. So the verdict. Most important earnings call in years. Teradyne finally delivered the AI inflection plus a TAM expansion. The bull case is now much stronger. What I didn't do in this thing, which I would have, is gone through the specific channels from a top-down basis that I believe are going to accelerate. The one thing that AI does not have yet is the ability to look at the things that are coming. So it can only go out and figure out what's been written out there, and that's why it could do for Micron what it did with Micron. But if I would have said what's going to happen to Teradyne because there's an upgrade cycle coming in phones and computers next year, then it'll build that and it'll also go through it. Finally, for the technical piece, I've shown this to some hedge funds. I have an algorithm that I created. All I have to do is take this chart from Bloomberg, copy it. This is a 5-year chart of Teradyne. I just paste it in, and then it does all this work, and it gives me a total score on this with anything above 70 as in the you should be buying it side. The pattern is good. I'm an Elliott Wave person. That's in there. It does all this stuff. I set up the prompt. It's a very long prompt. It weights these on each component. So imagine if you had a person that was a good trend following analyst, someone who's good with candlestick or chart patterns like bases like John Roque, candlestick patterns, Elliott Wave, this. I put them all together and I get a weighting on it. And so if it's all lining up some way, that's a better way to do it. Because of all that stuff and because of the outreach I've had from so many people, from the consulting side, the stuff that I do for people out of my own business, not for 22V, I am going to start putting stuff up on the website, which will be things that if people want them, they can get. It'll be a combination of ideas around themes combined with some of the technical analysis side. So on any of the themes that I've mentioned in the past, I'll probably have one a month related to the AI side. But then in addition, I'm going to be doing a bunch of training videos that will be on there as well to show people how you can do this on a longer format. I did want to show this because I have a view towards next year with where we are that I think people need to think about. So I do believe small caps are going to have a rally. I do believe PMIs are going to go up sharply next year, and I think people need to focus on the way their portfolio looks. I think next year is going to be a year against large caps, not because large caps won't still do well, but large caps have done exceptionally well because of the AI trade. The problem is for a lot of these companies, particularly the ones that you see here, these are all big spenders, and a lot of them have bottlenecks already. The question is, for like a Siemens Energy and for a GEV, their gas turbine situation leaves them in an issue. How can you be trading at a multiple if you can't grow things because you can't produce relative to the demand? It's not that these stocks are going to go down, but I think there's an issue. So here's the Morgan Stanley AI Power Index, which is the orange line. The problem is you can see how correlated it is to an equal weight of these 8 names. This is the concentration factor. For everyone who's massively long these names, I think you have to be worried about what I'm about to show because I can already see it happening. This is everywhere. Who makes the data center? Everyone knows these names by now. If they don't know them, they own them in a basket or they've come out and done the bottoms work. Everyone knows that these guys are going to benefit from the data center. The question is, have they hit bottleneck side? If you want to go read a research report that goes through the data center build out and at least gets the emphasis on how big it is, how much is going, and look for some other names that they haven't listed here. This Citrini Stargate, they did a field trip there. They have a ton of photos. I highly recommend it. I spent time on it. It just shows the massive dollars that are going. This is what you want to invest in for things where you're looking for big movements. And that's where I think the small cap stocks, as I'm going to show, are going to see a lot of these because of the size of the mega caps relative to the size of where they're going to have to go into. I've been told by many people that have traveled out in the Midwest, they are seeing small businesses where lights are being turned on. Their big issue is, Can they get the people and can they do this? But they are going to see demand go up for all kinds of widgets that are going to be part of the data center and the utility build out. So far, it's been the mega cap stocks. They've got shortages. So where's the rest of it going to come? The gas turbine situation is one of the most important themes for next year in terms of spreading into small caps, in my opinion. So it's not about GPUs anymore. It's all about power. This is from a Google employee working on data centers. So this is all you need. Power, lack of available power, reliable power has become the biggest bottleneck for us. They basically talk about the fact they don't have the issue. Supply chain GPUs, which we all want to get, GPUs, we have our own internal GPUs, but GPUs from NVIDIA, either we buy them or we can rent them from CoreWeave. All of the winners, that's already there. That's not a big constraint. After COVID, supply chain was a big one, but now this is all about power, unfortunately. They all need power. So you have to do all your research on power. And I'm going to start showing this. I spent the entire week on Power Podcast. So you can go listen to this one. This is with the former Microsoft head of energy. As we've covered in other recent episodes, the growth of data centers and the massive amount of power they require is reshaping the energy landscape. Today, I want to zero in specific challenge at the heart of all of it, the watt-bit spread. He's the person that created that line. I think you should listen to it because of this. Gas turbine shortage risks new energy crunch. I completely agree. I think this is the biggest risk for next year. Everyone has been focused on using natural gas, including the administration. It is very obvious to me in reading everything and doing my work on AI that we're going to get turbines out every year. That's great. But AI demand is going faster. And since the demand is going faster, we have to figure a way to deal with it. The uniqueness of AI power demand. The scale and acceleration, supply constraints. It's not just gas turbines, it's transformers. Supply cannot flex quickly, creating bottlenecks. This is something that I think is critical. It's where I spent all of my prompts this week. Every single time you ask someone in the energy side how to get to the demand side, meaning, hey, here's our supply stuff for oil. Okay, what's oil demand? Well, that's spread across the globe and that's nominal GDP. This is moving faster than nominal GDP, but it is controlled by the grid and it is controlled by the hyperscalers. They flip it on, they flip it down. And electricity is completely different. When gasoline goes higher at the pump, then consumers stop spending. In the case of AI, they have unlimited demand at this point. So we have a problem here, and it's putting in a systemic impact on grid stability and efficiency. So all the hybrid solutions, this is a unique situation. It has to be about grid stability and efficiency. So you have to learn more about what this means, and this is where these podcasts become important. This creates a new power negotiation dynamic. Hyperscalers are quasi-utilities, shaping investment there. Hybrid solutions. With shortages in traditional infrastructure, like the ones we mentioned, you need hybrid solutions. And they are built around flexible demand response, including Bitcoin mining. This is the beginning of something I'm going to say time and time again. AI, purest AI trade is Bitcoin. Bitcoin is energy. It has an energy component. There's a mining component. They were the first digital people to build out these centers. They are experts in this field, and they actually serve a very, very big purpose when combined with batteries and with renewables, which is going to have to be one of the solutions. Accelerated renewable integration paired with storage. That's what this side is. Energy efficiency optimization at the hardware, chip, and infrastructure cooling power levels. This is a much more complex thing than I think people are fully. This is not just go out and buy an energy stock. This is not just go out and buy natural gas or oil or coal. It's much, much deeper, and it involves grid capacity and flexibility. It is critical to the whole solution and everything that I've spent on. So expand on the fastest to deploy. Wind, solar, and storage first. So if speed is the issue, these are the ones, despite the one big beautiful bill, that you want to continue to focus on. I'm going to go through what those names did this week. Battery storage. Do your work on battery storage. Critical to the whole thing. Batteries are needed for flexibility. I will go through the Bitcoin mining side later. How important is flexibility? Flexibility is critical, arguably as important as raw megawatts for meeting AI's electricity. Flexibility means the ability of handling when the loads, when they're going up and down, because you're competing with retail and commercial along with AI that is there. So think of it as there's AI demand, which is ramping up dramatically. You've got consumer and commercial, which is not ramping up dramatically, but is always there. But then you get these supply shocks. And then you have Bitcoin, which is always in there, on there, but is like a virtual battery where it can turn stuff down when all of a sudden it goes through. And most importantly, for the financial side of renewables, they help the financial side like a restaurant. So I want you to remember, as I get into the Bitcoin mining later, if you ran a restaurant, you're paying expenses. And some of those expenses continue even when you're not serving food. Where Bitcoin mining fits in is during those night times when the restaurant is closed, they're making money and making it more profitable for people to run the business. That's how they help renewables and anything that goes through. So for everyone who's been on the ESG side and has gone against Bitcoin and Bitcoin mining, you've reached a point where you are going to have to get rid of your bias, just like I said with Tesla, and you're going to have to realize without the problem of having a flexible load, peaker plants, gas peaker plants, where you need transformers and gas turbines, they're expensive. They take time. They're not going to be available. So for everyone who wanted renewables, guess what? Bitcoin's going to help you be more renewable. So what's been happening? First, solar makes new one-year highs. Fuel cell breaking out. This is all in the last month. Plug, Fluence battery, EOS, one I've mentioned. I got to show you this one because I think I first mentioned it on here about 50% ago. All battery players, all things people were involved in at some point. They obviously didn't want to be involved in them anymore, and the reason was because they had disappointed. These were all left for dead for a variety of reasons. The issue is, if these guys are going to be a major part of what's necessary for the data center, and you saw the numbers that were being spent, here's the market cap of these companies. They're in the Russell. If you go through what led the Russell on Friday, these companies did. Look what they are. 1 month performance. This is how alpha is created. This is how retail jumps on these themes. Here's LIT, this battery, lithium battery, the whole thing. Now, I just want to make sure, because this one's been asked for me because I showed it last week or 2 weeks ago. Most of the companies in here are Chinese. So just remember with LIT, it is not, even though you can buy it in the U.S., it's not U.S. stocks for the most part. Okay, now we've got a podcast again I think you guys should listen to. This was on the Ben and Mark podcast, which is an A16Z, but it's Ben and Mark is the podcast. Andrew, CEO, China has scale. Can America catch up? This is all on the problem related to manufacturing in the U.S., but from a military standpoint, this goes into the China-U.S. side. I think this is important information for everyone to understand. If China was to invade Taiwan, the war games show us the U.S. exhausting key munitions in 6 to 8 days with 2 to 3 years to build stock. They talk about this. And this is so important for so many things. First of all, anyone who doubts that we are going to build up manufacturing and PMIs are going to go higher, I just don't think you're paying attention to what's happening. This is not just reshoring for reshoring saints. This is reshoring for national security, and the government is showing everything it can. Bought a lithium, made an investment in a lithium company, announced another critical mineral investment on Friday. Already invested in MP, that's rare earth. Already invested in Intel. All of those companies are necessary for modern military, but also for AI in some framework. So, all of them, they're completely aligned. So like I showed you in the data center, you need batteries. Well, you need batteries for humanoids. You need batteries for drones. Everything is related to the same thing, and all of the choke points on supply, they're all from China. They control it. China's 20 years ahead of manufacturing autonomy. The U.S. edges software. So we have to speed this up significantly. This is not a small thing. So here's what's happened. The government announces an investment in LAC. Goes up to 5 and change. Now it's doubled from there. Here are the lithium names. Again, look at the size of them. That just shows how little money we've spent doing this. I didn't hear of this stock until this week, until someone who called me and said, have you heard of this? Here's another one. Antimony, UAMY. They put a $250 million, they got a contract win. You go read about it. It's all about munitions for the military. Simple way to look at this. If I was going to bet and I had to pick one thing that 3 years from now, Consumer staples market cap is 3.3 trillion. Here is the energy market cap of the S&P 500. Here is the utility. These two combined will be bigger than this. Utilities will probably be bigger than this. If you want to go look at what utilities relative to consumer staples looks like on a 34-year chart, utility bills are going higher, power is needed, it's all on the grid, prices are going higher, there's no way to solve this, and consumer staples is being disrupted by Ozempic and a whole bunch of other things which are only going to get worse with AI. If you want to be long AI, you get long utilities. You want to be short AI or AI disruption, get short anything related to the consumer, but in particular, consumer staples. Russell 2000, I've talked about small cats, I get pushback on this one. John Roque put this out. We are basically, and we did break out finally, of a 4-year point. All right, now these are the weekly charts. I want to show you the monthly because he's showing these patterns, how this thing trades and how when it finally breaks out, it's a big thing. Now, if you take the breakout points here, 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 and now here, PMI, 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 and here we are. PMIs are going higher, guys. You can argue as much as you want. You can focus on the monthly numbers. All that matters is 6 months from now. The stock market discounts what's going to happen. But so does 91% of central banks are cutting rates. Here's the overlay with the PMIs. If you're not playing for PMIs to go higher, I don't get it. Here's the best PMI trade you can have on Bitcoin. Why traditional finance will finally connect Bitcoin to AI. So I've said and I've given up trying to explain to people why I'm heavily invested in Bitcoin, why it's the purest AI trade, why it will continue to compound and is actually going to accelerate soon, and it will be the thing that takes away from this. So labor market pressures we went through at the beginning. So you get social unrest, you get more people that are looking for a new system. That's what socialism equals. That's what anything equals. That's what throwing out the incumbents equals. You will continue to have it, but it's getting worse as AI agents come in, and there's nothing that they can do to stop it from a corporate perspective because profit margins are being used against that, and that drives a bigger gap in the ability for people to afford things because that means the wealthy are getting wealthier and we will not tax them. So we're trying to build up manufacturing and do handouts. So we're figuring everything we can. That is the major thing behind it. That has what started Bitcoin. That will happen. The mega caps are going to be under pressure. I can already see it happening. And I think the spending is going to be an issue at some point here because I don't think they're going to see the same size of revenues, but more importantly, if the power thing becomes a major issue, they're still spending money, but they can't release new products that can bring in money. That is an issue. They need the power. The dollar weakness. I'm not going to go through this week, but I will say dollar strength started after the Nikkei peaked, and it happened, and U.S. exceptionalism is all about coding. I've said this to people on the phone. The dollar has equaled coding dominance. Coding is now ubiquitous. The dollar will weaken going forward, not because of the macro reasons, not because of all the garbage that I hear that people actually think and believe in a linear world where GDP is not a statistic that matters. In a world of massive disruption where AI is going, the problem with the dollar is the US has the most weighting towards coding in the markets, so it's more of a disruption, even though the profit margins are growing, so I think it'll underperform the rest of the world. But as the rest of the world is a better place to put your money, purely from the basis of what I showed you in small caps, which is they're tiny and they are going to be making money from AI, you're actually in a point where there's just a rebalancing around the globe, which is the democratization of AI. AI is connected to energy, which is connected to Bitcoin and the mining side. And then you've got the network effects, which are going to start. You've got stablecoins. I showed you that before, but then tokenization is coming next year. And that is the big boy. Bitcoin was up 10.5% last week. Here is what you're looking at over the last 5 years. Seasonality, October up 22%, November up 13%. Here you go. These are your next 7 months. See if seasonality plays out. But sell in May and go away has been actually a Bitcoin story. I wrote this paper last week. Bubbles lift everyone, concentration leaves most behind. AI investment into all this will leave, as always, losers. But to focus on in a bubble, you're not making money from that. The concentration is what's happening. There's very few winners. I think it'll spread out next year because, again, they need the energy side, they need the building side, they need the manufacturing side. That stuff's been left for dead. Those names will go from $3 to $20. They will create a tremendous amount of alpha for people if they do the work. They're small, which makes it difficult, but I'm just telling you, it's a lot easier for people to go look in there at this point than go look at Micron at $200 and believe that that's going to continue to produce the alpha that it's produced this year. Concentration leaves most behind, and that is positive for Bitcoin. Imad, on that Moonshots podcast, if you want to see what a bubble looks like, just look for the next few years in digital assets. I could not agree more. That will show you completely what a bubble looks like. Generative AI is the proper thing. This one will be insane. He's saying that because of the network effects. He's saying that because tokenization is going to open up. We are changing the financial guardrails of the world with crypto. This is as important as anything that has happened. Tokenization is going to bring so many changes to the way the world works. It's a disruptive force. It will get people speculating. Think about what's happening gambling in this country. Think about what's happening with the prediction markets, which are related to crypto. This is just the beginning. The story is simple. Trump said America can grow its way out of the debt. What it really means is debasement. Shutdowns highlight the erosion of trust in U.S. institutions. Bitcoin is the pressure valve. That's not bearish S&P, it's bearish dollar. Goldman Sachs. We're at the point now where Bitcoin is becoming part of the traditional finance world. We're going to be dealing with this, how to improve inflation targets without inciting the bond vigilantes. That's already happening. But yes, inflation is going to err on the higher side, and they're going to continue to cut rates because the job market will be weak from AI. So you get it both ways. The technical side from John Roque. Here are the stocks which are growing in size because of the issuance that's come out this year for many of these. You've got a bunch of the miners on here. 4, for those of you who don't know, is John's perfect score, and you can measure which ones are going up. They just continue to get better. So these are ones that went from a 3 to a 4. I would just go spend time because I think the Bitcoin side is going. How Bitcoin mining stabilized the grid, saved Texans $18 billion. Crypto mining can enhance, investment in renewable energy production and curb overall carbon emissions under suitable conditions. Blah, blah, blah. You guys can go read it. This is what happened, and this is basically the story of December of 2022. This is really important. If you go back to the issues that happen in Spain, the issues I hear getting close in other places, as AI demand grows everywhere in the world, grid stability becomes an issue. Because renewables are intermittent, you get a grid stability problem where if there's an event like what happened in Texas, which was a wintertime event, which causes problems, and it sends everything up, and it causes blackouts, or it causes them to not have the power, to have pipes freeze and everything else, it becomes a major issue. So Bitcoin mining is now becoming part of the solution for the first time as people realize this, and I think that all AI companies and all utilities and grid optimization is going to start to follow what happened in ERCOT and the importance. At a minimum, go listen to this podcast and go get more details on that exact scenario. I'm not going to read the whole thing. Please expand on what is discussed with regards to Bitcoin miners, batteries, and AI demand. Again, I gave you kind of an analogy with a restaurant. Bitcoin miners give you flexible price-driven demand. They turn cheap or stranded electrons. So again, that overnight example, when prices are low, they're doing stuff. And then when prices get high, they come off of the grid. The way that they help by being on there all the time is they make it more profitable for the companies that are producing the power. So you can see where this is important, mainly if 2 things are occurring. 1, we're getting to the point of running out of capacity. The Texas event was a one-off event. If it happened once every 3 years, Bitcoin miners don't have it. If we're getting to the point because of AI demand that we're there all the time, that makes the risk of having blackouts much higher. That makes the value of them go higher. If at the same time we don't have turbines and we need to do more or higher percentage of the intermittent renewables, you can see where their value is. So for everyone, again, who doesn't realize, Bitcoin miners will be viewed positively for the environment because they actually are going to drive more demand towards renewables because of their ability of handling the intermittent side and being a virtual battery. So the real value of Bitcoin miners grows as the grid becomes vulnerable and wholesale electricity prices are rising, like I said, exactly like the PGM auctions. That was a question I asked. And then it goes through. Exactly. That's the way to connect the dots. Let's unpack it clearly. Again, this is the way I use it. If you guys want training on this, reach out to 22V. They can find out how I'm trying to move my consulting business to some degree to help people on there. It's just trying to find out how we can do it. But this is a way for people to figure out how they can get through these themes in a course of 2 days the way an analyst would, but in a way with far more breadth from both the top-down basis and then go through a bottoms-up basis like I showed with Teradyne, and then you can spend the time taking podcasts and going through it and saying what ideas are coming out of here that are not consensus with people. Connection to batteries, the grid optimization, improving power project economics. Bitcoin miners are flexible demand. Again, that's the critical thing. They raise the load floor in the weak hours. Because Texas needs everything, more gas, wind, solar, batteries, it is a massive place to look at as to what's happening in AI because they are the demand capital. They've done an amazing job with ERCOT. You should go spend time on it. It's one of the reasons why people are migrating there is because they've been doing so much on this. So again, the gas turbine matters and it goes through as to what it is. And if you thought this was an issue, just remember, and if you go read this article, just type this in to Perplexity, Hong Kong Economic Journal, go read how China has done now the exact same thing. And remember, they attacked the mining industry 3-4 years ago. Well, now they're using the miners for exactly the same reason. All right, guys, that's it for this week. Thanks for everyone reaching out. I look forward to going through it. Go to 22V, stay on the website, keep looking, reach out. We're trying to make sure that any retail person that we couldn't do something with, since the demand was so high and people want trade ideas, they also want training on AI, not just for them, but for their kids. Reach out there. We'll get stuff on the website as soon as we can. And I'm looking forward to spending more time with you guys, even if it's just virtually. See ya. Bye.